By Colin Rush, senior analyst at Oppenheimer. He's got a 1080 price target. And Pierre Ferragu is an analyst with New Street Research with the street's highest price target of 1580. Welcome to both of you. Colin, I'll just start with you. What do they have to say today? And I mean, it is interesting the shares are up less than 10% now over the past 52 weeks.
Yeah, I think the stock from here is really looking at their ability to really tap into the self-driving opportunity. And so I think we want to see for the shares to move higher, to hear something about the recurring revenue model around that software, as well as their ability to start monetizing some of that technology in a little bit different way.
Pierre, the Uber bulls have been absolutely right about Tesla to this point. But sometimes I see your projections for it to be, whatever, a $10 trillion company or whatnot by the end of the decade and go, or is it just going to be a $1 trillion company and it spends the rest of the decade just making millions and millions of cars? But does that necessarily grow its valuation from here?
Yes, Kelly. So there is an incredible, contradiction that you can see in where Tesla stands today, which is that it's $1 trillion market cap, but it's still a startup with 1% market share. So I do agree with Colin. In the long run, what Tesla can do in terms of self-driving capabilities do matter a lot. But in the near term, what I see is a company manufacturing cars the way other people in the world manufacture chips, with very advanced factories, very efficient factories. They have unlimited demand so far, 6 months wait times for all cars. And competition is honestly nowhere to be seen. Everybody is announcing electric cars. Some of them look very good and should be doing very well in the market, but nobody is in a position to ramp volumes in a way that could, overshadow the very rapid growth of Tesla. And so the reason why I'm still very positive about the stock today has nothing to do with FSD, nothing to do with all the additional opportunities that the company could make. It's just the fact that Tesla is very well set to grow at least 50% its production this year. Mm-hmm. And so revenues will grow faster than that because Tesla is forced to increase prices to push back on demand, and margins will continue to expand. So I'm very, very positive this year about the core auto business for Tesla.
And Colin, it has to be said and can't be said enough that the problem for EV makers is not demand. Everybody loves the prototypes. Everyone loves the Rivian and the Lucid and the this and the that and everything that Ford and GM are coming up with. The problem is making them at scale, in an efficient way and to meet that demand. We just saw Ford. This was more of an ICE vehicle, but again, it has production capacity challenges. So how quickly can the rest of the auto sector bring online enough EVs that it will seriously dent Tesla's market share?
I don't think they're gonna catch up. At this point, what we've seen the company do is design vehicles for production that are far more efficient, but also evolve the powertrain. And this has been a core part of our argument, is around the chemistry within the batteries. So one of the things that we're looking for today from a technology update perspective is just where they're at with the 4680s. The acquisition of Maxwell Technologies a few years back has been, I think, incredibly important in terms of that dry electrode process technology that Tesla bought to really change the form factor and the functionality of those batteries. And if they're able to really ramp that up, the efficiency, and get some decent yields off of it, they're going to be able to drive a lot of costs out of the powertrain, as well as the simplicity of the design, which should drive manufacturing costs much, much lower.